what's going to happen to your effective interest rates? Well, interest rates came down to as low as 2% in the overnight market, but then started, well, as if that is not bad enough. We now sent a signal by reducing the CRR for merchant bank 10%, which means you are loosening the monetary conditions worse than what they are. When monetary conditions are loose, monetary policy must be tight.
Yeah.
Right?
So speaking of monetary policy, I mean, all the indicators now are pointing to another hike.
Yes,
right?
Definitely.
Do you have a sense? I mean, I feel like we're kind of backed into a corner. We have no choice but to move in that. But do you have a sense of just how big that hike might be?
I would say...
Or how big it needs to be, maybe?
No, it needs to, I would say, maybe 50 basis points, right? Because you don't want to be so disruptive, right? But at the same time, that is a meaningless move because not much is tied to the MPR, right?
Yeah.
So let us assume that you went by 50 basis points, but then you have already reduced CRR for merchant banks, and then you reduce CRR again, right? Which means you're putting more money into the system, and then you go back to money.
It's biting your nose to spite
Absolutely,
your face.
You see, you're basically what is happening now. You're scoring an own goal and then equalizing and saying that you are taking credit because you created the problem in the first place. So the Nigerian system must understand how to differentiate between symptoms and causes, right? The cause of the misalignment is there, and the symptoms of the misalignment, and then you know what you do. When we started this program, you announced that money supply was at 64 trillion naira. That's a very interesting number.
Yeah.
Money supply growth in the last has been over 15-16% in the last 2 months. If your money supply growth is 15% and your output growth, your GDP growth for the year is 2%, ab initio, before you start, you are 13% inflation number.
Of course.
Then you now take the exchange rate effect, pass-through effect on domestic prices, and that has what we call some effect on your tradable, right? You now go further and now say that the exchange rate used for computing import duty before was 412, it went to 587, it's now 770. What has happened now? The flour millers have increased the price of flour about 2 weeks ago by 5% to reflect the 587 naira import duty. They would have to do that again. And the bakers have said, okay, thank you very much. The price of diesel is stable, but we are announcing on the 27th, they've announced it, a 15% increase in the price of a loaf of bread. So let's look at it. The bread goes up by 15% on the 27th. Tomatoes is now at 90,000 naira a basket, right? Peppers are slightly lower than that. So you have bread, pepper, tomatoes, and vegetable oil. So you can see that all of a sudden that food basket is going to, between June and July, it's going to spike quite significantly.